this deal still has to get through Congress, specifically the Rules Committee. That's one place where a lot of people are flagging it could get tied up. How concerned are you about this deal actually making it through Congress?
I'm not that concerned at this point. I think it's going to sail through the Rules Committee. Maybe I shouldn't use the term sail, but look, you have 9 Republicans, 4 Democrats. I think you have 2 conservative Republicans that are expected to oppose it anyway, already sort of come out and express their frustration. I don't see all 4 Democrats opposing it, so I don't think it's going to be in jeopardy today. So that probably sets up a floor vote on the House, probably after the market closes tomorrow. Again, I think the math that Kayla laid out is pretty accurate. And the burn's going to be on, I think, President Biden more than Speaker McCarthy to deliver a lot of those Democrats. I have faith that, at the end of the day, that he'll be able to do that. Speaker McCarthy will deliver the Republicans. I expect at that point it will eventually pass the Senate. Debate could drag into the weekend. There's a chance we may rub up against that Monday, June 5th deadline. I think there's some question still as to whether or not that may be an overly conservative estimate. I worked at Treasury Department. We did tend to provide a very conservative estimate with respect to the X date. If forced, we could even use prioritization to pay bondholders if needed just for another day or two to allow the legislative mechanics just to sort of work their way through. But I don't really think we're at risk of a serious default here, and I think that's good news.
All right, Steve, I don't know if sail's an improper metaphor to use because we could hit some choppy waters, especially in the Rules Committee. And as we mentioned, we heard some Congress people already saying they're going to push back. So you hit on something I really wanted to talk to you about. You said this might drag on. So the longer this goes, even though we have some more breathing room with the X date now at June 5th, are we in danger of our credit rating being downgraded with all 3 of the big agencies flagging that they are looking at these negotiations and potentially looking to downgrade the U.S. credit rating?
I don't think we should be in that position at this point, because I think the fact that we're talking about a deal, this is a lot of posturing. A lot of members want to try to secure something in exchange for their vote. That's nothing new. Both sides do that. I think moving forward, there should be more concern because the debt limit's not going away. Both sides need this because a political party that is not in control of the White House uses this as leverage. You have Republicans using it now to get spending concessions. You had Democrats using it when Trump was in the White House to get spending increases. So that's just the way the game is played. But I think the bigger concern is we look at greater polarization, more gerrymandering. The incentives just aren't there for a lot more moderate members to come to Congress. And so these ultimately are the folks that need to come together to reach a bipartisan deal to avoid default. And as those trends continue, I think that's the bigger risk moving forward. But your point with respect to a default downgrade, I don't really see that in the cards right now.
All right, a lot of people breathing a sigh of relief to hear you say that. I want to talk to you about the market impact of all this. How do you see these negotiations and deal impacting the bond market? We see elevated yields on the short end of it. We see elevated yields on the long end of it. I pointed out the 20-year earlier, rising 1.25% when it comes to yield just in May.
I think the big thing with respect to the market is just to be removing some uncertainty here. I mean, talking is better than not talking, so I think that's encouraging. Treasury's going to have to refill its coffers, but I think at that point, they might have to offer some attractive interest rates in order to provide, a good market there for participants. But if you're anticipating the interest rates may even start to decrease moving forward, I think there's going to be enough appetite there. So I think that's probably, again, good news moving forward here.